I'm hopeful that some of this, the rate of this happening is behind us, at least in this cycle, because you don't have the Fed, for example, tightening as fast in 2023 as they did in 2022. But some of them are still very much lingering. And Turkey still has runaway inflation. Argentina still has runaway inflation. And even if they partially get them under control, the underlying problems are unfixed. So sometimes it's the local jurisdiction doing something wrong, but then a lot of it goes back to just the way the system's constructed. And
macro expert Lyn Alden says that macroeconomic conditions hint at further Bitcoin rallies over the next several months, but with a caveat. She says that recently, a slight easing of liquidity has helped set the stage for Bitcoin rallies over the past several weeks. The macro expert predicts more price appreciation for the king crypto, but says that liquidity trends still weigh down on Bitcoin over the longer term. Optimism is increasing throughout crypto as Bitcoin broadly retains levels which are 40% higher than at the start of the year. What the rest of 2023 may hold, however, Alden suggests that it is naive to assume that the good times will continue unchecked. The Fed is currently conducting quantitative tightening, removing liquidity from the economy to fight inflation after several years of mass liquidity injections, which began in March 2020. These are being mitigated thanks to U.S. domestic politics, but later on, the status quo could shift back to the kind of restrictive mood seen throughout Bitcoin's bear market year of 2022. If H2 proves to be Bitcoin's reckoning, it will tie in with other warnings from market commentators regarding 2023. Alden says it's possible that a similar scenario to March 2020 awaits Bitcoin at some point before the next bull market, whereby a sudden liquidity shock hammers Bitcoin price down to retest macro lows before quickly bouncing up.
And I remember reading Ross Stevens' his 2020 shareholder letter, and he talked about Bitcoin quite heavily in it. And he talked about the idea of in the future, basically Bitcoin enables kind of like how human settlements happen around coasts and rivers. Bitcoin is this unique consumer of energy that can go to where the energy is in a way that most other things can't. And then by extension, you can have settlements built around those uses of energy. And you can build out infrastructure from there. And what we're kind of seeing lately is the idea that a decentralized web is a good thing. It's just that you don't need your own token attached to it. So we've seen, I mean, you mentioned Nostr. There's also the whole Keat/tags, that vector.
Yes.
There's Web5, right? There's multiple different kind of angles here. And, we'll see how some of them fit together or compete with each other over time. But the point is, it's just basically showing that when there's actually a good product market fit, the product sells itself. You don't need to add unnecessary gambling to it, try to get out of the position quicker. You're actually building something of value. And then the fact that there's this common money associated with it also allows for monetization in the normal way. Kind of like if you invent Uber app, you don't have to invent another one with its own money, right? Dollars are fine, or obviously, Lightning would be great, but basically you don't need to reinvent money every time you reinvent a new service. And I think we're seeing that play out in the kind of the Bitcoin focused, kind of decentralized web applications that have been gaining some momentum lately.
It can be observed that Bitcoin's most recent upswing is similar to the bullish revival that occurred in the middle of 2019. Around the time the U.S. Federal Reserve eased off on the tightening pedal 4 years ago, giving way to Bitcoin's upswing bull revival that saw the price climb by almost 250%. The rebound comes as the Fed nears the conclusion of its liquidity tightening cycle, which roiled risky assets, including cryptocurrencies, after a year-long slump that slashed 68% off the price of Bitcoin before it entered a protracted consolidation phase at the bear market's depths at around $18,000. Bitcoin is currently changing hands at $22,970, up 9.54% over the last week, with a total market capitalization of $442 billion. On January 26, a cryptocurrency trader and analyst going by the Twitter handle, The Scalping Pro, indicated that the possibility of Bitcoin reaching $28,000 is viable, despite the fact that the digital asset faces heavy resistance ahead. The analyst said Bitcoin bears are still in shock after the recent bounce and will continue to short the cryptocurrency. However, he emphasized that the range between $23,500 and $24,500 should continue to be closely monitored, as he thinks that breaking through this zone would cause Bitcoin to surge to $28,100.
All of us on this call, we have access to dollars. It's not really a problem for us. We can just do our normal day-to-day activities with dollars, and then we can save and use Bitcoin in however way we want, and we're fine with the volatility. But a common thing that comes up when you look at these small communities that are building out around the world, these little Bitcoin communities, a common thing that comes up is, hey, we need dollars too. And, the ones that are doing it correctly, they acknowledge that their dollars are centralized. And the whole point is that the central hub is outside of their country. So, for example, let's say you're in Argentina, I've seen it described as someone says, okay, I hold local currency for 1 month's worth of expenses. I hold, stable coins for several months worth of kind of intermediate term savings. And if I want to put savings away for years, I put it into something like Bitcoin. And from the perspective of, say, an Argentinian, they've had a history of if you put dollars in the bank, they get confiscated. It's hard to get dollars. And so instead what they do is say, okay, I'll hold dollars. They're centralized, but the central hub is outside of Argentina, right? So unless the United States goes after it, or unless there's fraud, there's counterparty risk, those are real risks to be concerned about. But the central hub is outside of that particular country. And so there is so far been a pretty strong demand for dollars by a number of people in emerging markets in these spaces. And basically the technology allows them to move around faster and in a more peer-to-peer way. And so far they've kind of shifted around to different blockchains. So obviously they started on top of Bitcoin. A lot of them migrated over to Ethereum. That's mostly used for trading, right? Because it's higher fees, bigger amounts. Whereas a lot of the spending dollars moved over to Tron. And basically a lot of these spaces say, okay, I want to have stable coins, but I don't really want like another token associated with it. I don't, if I'm using a centralized stable coin, I don't need a whole nother centralized layer to deal with.
An interesting thing is happening in the global arena, and it might just be one of the major factors that may influence Bitcoin demand later this year. A battle is being waged against the dollar, and this might challenge its global reserve status. Geopolitical tensions are also taking the battle to the economic front. Russia and China are in joint efforts to roll out a new common global currency called BRICS in alliance with numerous other nations. Meanwhile, Bitcoin is about to conclude a bullish first month of 2023. And so far, those addresses that have been buying seem to be holding on to their coins. Bitcoin's volatility index pivoted in favor of the upside since 20 January. This suggests that Bitcoin might be headed for more volatile price movements at the start of February.
Basically, what we see most in the crypto space is that every time someone looks at Bitcoin and thinks they can improve it, the thing they throw under the bus is decentralization. They basically make a more centralized thing, which has more bells and whistles. Maybe it's faster, maybe it can do more, but then the cost under the hood for that is that it's centralized in ways that are not always obvious to a user. And so they see it's a cryptocurrency, it's probably just like Bitcoin, but it can do more. But if they don't actually know the nuance, they don't run a node, or if they don't, look at the different requirements of the network. If they don't look at what are the control points on the network, like who has undue influence, who can maybe change the protocol in ways that users wouldn't predict. What happens if the network goes down? How do you determine what the canon state of the ledger was, right? So what is the unforgeable costliness? What is the official state of the prior ledger? And with these other systems, you don't really get those same kind of assurance that you get with Bitcoin.
Bitcoin needs to reclaim this $23,400 as support to move higher. Otherwise, there is a risk of a new lower high forming relative to the summer 2022 highs. I do think this is a deep value accumulation zone for Bitcoin with a 3 to 5 year view, but traders should be aware of the liquidity risks in the second half of this year. Stochastic patterns leave the door open for 189% Bitcoin price gains versus the current Bitcoin all-time high, according to analyst. For many, Bitcoin price action is still bound by Bitcoin's 4-year halving cycles. The resulting price pattern offers one all-time high year in every 4, with 2025 next in line. What are your predictions about Bitcoin and other cryptocurrencies in 2023? Do you expect these assets to perform beyond investors' expectations? Let us know in the comments section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.